Today's topic is Form 8863, Education Credits, focusing on the American Opportunity Tax Credit and the Lifetime Learning Credit. The exam will test your ability to distinguish between these two credits, calculate them correctly, and identify eligible taxpayers and expenses. Let's start with the American Opportunity Tax Credit, or AOTC. This credit is for students pursuing a degree in their first 4 years of post-secondary education. A key exam point is its calculation and refundability. The AOTC is worth a maximum of $2,500 per eligible student, calculated as 100% of the first $2,000 in qualified expenses and 25% of the next $2,000. Crucially, 40% of this credit, up to $1,000, is refundable. This means a taxpayer can get money back even if they have no tax liability. Qualified expenses for the AOTC include tuition, fees, and required course materials like books and supplies, regardless of where they were purchased. The exam will try to trick you here. Remember that room and board are never qualified expenses. Now, let's contrast this with the Lifetime Learning Credit, or LLC. The LLC is broader. It's available for any course at an eligible institution to acquire job skills, and there's no limit on the number of years it can be claimed. The calculation is different and a common source of confusion. The LLC is 20% of the first $10,000 of qualified expenses, up to a maximum of $2,000. A critical distinction the exam will test is that this limit is per tax return, not per student. If a taxpayer has 3 children with $30,000 in combined tuition, their maximum LLC is still only $2,000. Also, the LLC is entirely non-refundable. Here's a common exam scenario. A student has $10,000 in tuition but receives a $6,000 tax-free Pell Grant. You must reduce the qualified expenses by the amount of the grant. In this case, only $4,000 in expenses are eligible for a credit calculation. The exam loves to test this rule. Another major trap involves dependency. If a parent is eligible to claim a student as a dependent, student cannot claim an education credit on their own return. This is true even if the parent chooses not to claim the dependency exemption. The eligibility to be claimed is what matters. Also, taxpayers using the married filing separately status are ineligible for either credit. To help remember the key differences, use this phrase: AOTC is for a degree, for years 1 through 4, with a refund at your door. LLC is for life, per return, with nothing to return. This simple phrase covers the degree requirement, 4-year limit, and refundability of the AOTC, while highlighting the broader use, per return limit, and non-refundable nature of the LLC. Finally, be aware of modified adjusted gross income phase-outs. The exam won't ask you to memorize the specific income thresholds, but it will expect you to know that the credits are phased out for higher income taxpayers and may present a scenario where a taxpayer's income is too high to qualify. Proper documentation starts with Form 1098-T, but the taxpayer must be able to substantiate the actual amounts paid for all claimed expenses.